What is up, guys? Happy Tuesday. So in this video, I want to take a look at the weekly chart since we did get the weekly close very recently. It's Tuesday today, obviously, but I want to look at the weekly close because this week is a big week in terms of news. We have obviously the monthly close that's coming up after today. We have the FOMC meeting for the interest rate decision that everyone is watching closely. Are they going to slow down the pace of what they're hiking the rates at? Is it going to be 0.5? Is it going to be 0.25? Is there going to be talks about a potential pivot? All of those things are going to play a role in the markets. And that is why I want to look at the charts for more guidance. So let's dive straight into it. By the way, if you are new to the channel, please consider subscribing down below. Click the notification bell after you subscribe so you do get those alerts, and smash the like button if you do like these updates. All right, so what we have here, Bitcoin has dropped back, it's pulled back a little bit to 22,800. It actually hit 24,000 very recently. Now, you can see this is the weekly chart that we have here. We have the 50 simple moving average in blue, the 200 simple moving average in red. And as you can see, we're coming here to resistance type levels, which was the high from August last year. So that is obviously a level to watch in combination with the 200 and the 50 that is now almost at the point of a cross, which would technically be a death cross on the weekly if we do get that cross. There is a tiny little chance if the price breaks through that we don't get that death cross, but I think it is possible maybe we do. So we do have that trifecta combination over here of resistance, which after a big move up like we've seen, the bulls could be running out of strength here, and we could see a little bit more of a pullback in the short term. Now, as you can see, I've got two big arrows drawn over here for the potential scenarios. I do think if we can flip this and we get a weekly close above this level, above both those moving averages and above this $25,000 level, then it potentially opens up the road towards that Fibonacci golden pocket, which would be a repeat of 2019, where we saw Bitcoin go from 3,000 to 13,000 in the months of January to about June of 2019. And that was also a move back to the Fibonacci golden pocket of the whole move over here. You can see that's over here. We can actually add that same fib retracement over here, and you can see that was that entire move. So you can see there's a similarity here with the 50-week moving average. Once we get back above there, we're probably going to see some decent upside continuation and potentially to that same fib golden pocket level. But if we cannot get above here, there is that chance of rejection. Now, in the case of rejection, it doesn't necessarily mean we go all the way straight down. There are two paths in the case of that rejection. So if we zoom into the 3-day time frame over here, it's the same chart over here with the possibility of up or down. But you can see here, the rejection path will be a little bit different, because what I'm going to be looking for here is, even if we get a rejection, as long as this 3-day 50 moving average holds as support, this would be a pullback in a new bullish trend that after the pullback is complete could continue the upside and maybe break that resistance on the second time. So what is a possibility here is maybe we go down here and then continue higher and then break it and then still continue to the upside. That is a possibility. But of course, the second scenario would be simply a breakdown. If we get below this 3-day 50 moving average and we get below here, then obviously there is the possibility for a further breakdown. So as with anything, reading charts, it's technical analysis. It's not a crystal ball. You can't guarantee where the price is going to go. Nobody knows that with 100% certainty. Anyone who says that they do, they're either taking a guess and they're going to hope that they're going to be right. More often than not, they're not. But otherwise, they're simply just straight lying to you. So if you're seeing anyone else who's making calls for targets with 100% certainty, stay away from them. It's a big red flag. Nobody knows for sure. Okay, so we have to wait and see here what happens. We are technically at a level here of resistance or approaching it, right? It's technically about that 26,000. So we have to wait and see what is going to happen. Like I said, this week is a big week. Monthly close after today, FOMC on Wednesday, non-farm payrolls on Friday, and the market is watching that. So we're going to see, do we get a rejection here? Do we go down and then up? Do we go down and down? Or can we manage to somehow flip this and continue higher? So obviously we wait and see. how this develops, and then I continue to update based on whatever happens in this next scenario. So in the short term, if we zoom into the 4-hourly chart, you can see it has finally broken down below this 4-hour 50 moving average here in blue, which it stayed above for the whole move up from 16,000 to 24,000. So that is technically a sign in the short term for caution. As long as we're below there, there is the chance to retest this 200 on the 4-hourly, which is around the $20,000 level, which coincides with the CME gap at around that $20,000 level. So as long as we're staying here below this 50 moving average, keep an eye on that, because then it increases the odds of retesting that and pulling back. So in my opinion, still, I would consider that my main scenario would be this is a pullback in a still bullish trend. So if we pull back to whatever it's going to be, 22, 21, 20, maybe 19, as long as that 3-day 50 moving average holds, I will be looking for long positions to be able to buy that dip, because I do think after that there's a good chance for continuation. Obviously, we'd have to look at the charts in the short term at that point in time to be able to make a better decision. But for now, that is kind of the scenario I'm leaning towards. Let's have a quick look at the weekly Ethereum chart. It is currently trading at $1,571. Obviously, as you know, the last couple of weeks we had a big rally in ETH, and we are now at also a technical resistance. As you can see over here, we've got this rectangle over here where there was a lot of activity here. It acted as the support for the May 2021 pullback. And of course, also here, it has been acting as resistance for most of 2022 once we got below it. So now we're at a level, also, we're approaching this 50-week moving average here in blue, which combined with its resistance level is going to be very important to see what Ethereum does. Because if it can get back above this level in the same way as I showed you on Bitcoin, if we can reclaim this 50-week moving average and get above this resistance level over here, so get above $1,800 with the weekly close, things start to look interesting for the bulls, and potentially that opens up the road for, again, a move to the Fib Golden Pocket, which also coincides with about this high, somewhere between 3,200 and maybe 3,500. But again, that is a big if. For now, we are still at this resistance, we're under this 50-week moving average, and there is a chance of rejection over here. So in a similar way, like I explained with Bitcoin, if we get the pullback scenario, we have to see, is that indeed going to be the case that this whole rally that we saw the last few weeks was a bear market rally and we're going to drop down and go to potentially retest these lows or lower? Or is it going to be a pullback within a bullish trend? So we get that correction, and then after the correction, we continue higher and break this resistance, break the 50-week moving average, and potentially continue to that Fibonacci Golden Pocket. And I'm going to be watching the same 3-day 50 moving average. So this is the 3-day chart, the 50 moving average in blue. We are above there. That is technically a bullish sign. So as long as we stay above this 3-day 50 moving average around $1,350, a pullback will still be a pullback in a potentially larger bullish trend. So we can get that pullback, and even if we drop to $1,350, keep in mind that's a $220 drop. That's pretty bad for anyone who's playing with high leverage longs, who is longing this and not hoping for that dip. A lot of longs will get liquidated on leverage, so be careful with that. But we could get that drop back, continue higher, break it, flip it, and maybe continue higher. That would be the pullback scenario. Obviously, we get down below there, and then there's potential to run these lows, or potentially even run this low, and then continue there. So we're gonna have to wait and see how this week plays out, especially the FOMC, the interest rate decision, and the commentary around that, with the outlook for future rate increases, slowdowns, pauses, potentially a pivot in terms of cutting. We'll have to wait and see how that plays out. So I will continue to update, but these are the scenarios that I'm watching. So hopefully you found that helpful. If you do, smash the like button, subscribe to the channel, and I will see you in the next video.